Right. Okay. The next bit is advertising. And again, like I mentioned, you would notice, I mean, given the kind of professional nature of the work we do, you don't typically find accountants advertising themselves, probably apart from in magazines to do with accounting. But you do see adverts like this now and then. But we have to be very cautious about the work we do or the way we advertise. If you like, we can. I think this is kind of a fair enough good advert. It talks about your experience and the services that we provide. I mean, a website is an advert, so whatever you would imagine on your website is what you expect to see, on a flyer or anything along those lines. But there are many ways we find our clients, but we can go out there and do some advertising. But typically, ACCA themselves, for example, have some guidance in particular, which is why it's quite old knowledge, which is I'm trying to apply what they are saying. Some very clear guidelines as to the way advertising happens, if you like. And so the aim, again, the key point, the aim very much being, the aim, of course, being to impress, as opposed to, let me just, the aim being very much to impress as opposed to, the aim to being to inform rather than to impress. You know, not saying we are amazing and we can do it for you for nothing. No, it's very much about this is what we do, and that's kind of the point, really. So yes, again, like so, the key point here is that it's not about saying that we're better than others, and again, because it's about what we do, we're really highlighting the services we actually offer, if you like, and so that's really the main point, that we're not misleading, and it's really about just having factual information and not saying that we're the best firm in the whole area. Come to us, something along those lines, that we can do it for you for less than 10% of our client. No, that's all very unprofessional. So again, being very clear, again, the book is very clear. The members of ACCA are entitled to call themselves Chartered Certified Accountants, and they may use the letters ACCA or FCCA as if they are as members or fellows. But you cannot use these names in your company setup. You can't use these names in your company setup. And typically, as long as for you to be able to consider yourselves a firm of certified accountants, you need at least 51% of the voting rights to be under ACCA members, ACCA partners. So as long as half of the partners are ACCA members, then you may call yourselves a firm of chartered certified accountants. And I believe the same applies to a number of other bodies where you need at least half, if you like, half of the party are members of that body. Right. Okay. And so what you do have is, when you do have members with different bodies, what you simply have, I'm sure you've noticed, is on the letterhead you have all the different institutes on that page. But really, these are all minor points. And really, again, it's about having names that are, clear, if you like, and not confusing, if you like, really, or misleading to your users. And typically it's just having a name as opposed to telling us you're international accountants, when really there's only the one of you in the country. If you're a sole practitioner, you shouldn't be saying you have something in partners when there's just you solely in the practice. Partners can use, again, separately on their letterhead, you can have the ACCA logo, definitely, if you like, and that's fine, on your logo. Right, and that's pretty much that with advertising. In terms of fees, we've talked about this need for ethics, really important point for ethics, and it's always about negotiating ethically, if you like. We don't want to be lowballing. We probably will come to this idea. So in the process of doing this, you want to be avoiding disputes. If this is a year-on-year negotiation, maybe some kind of agreement on some gradual increase in fees from one year to the next. But what you don't want is to be having to argue about fees and things like that. It's not really in terms of fees, of course. Again, it's about understanding clearly what you are offering the client, and typically you would agree this at engagement, and there must be some understanding of, you would have some experience of setting fees and sort of either basing it on basically maybe saying, I don't know, whatever this is going to take 50 hours and 10 of these will be partner related, and 10 of these will be audit senior, audit manager, 10 of these will be audit senior, and 20 of these will be audit junior, and assigning times to that and arriving at a value and letting your client know how much time you intend on spending on the work. Or it might, who knows, you might have a sudden job come in that you have to do. And so the key point here is that there has to be some rhythm or rhyme or process behind your fee setting, so that your client is able to work with that. Really important, I mentioned earlier on, it's really important to communicate these fees in the engagement letter. Critical, because what engagement letter really is a contract between yourselves and the client, stating what work it is you're going to be doing and how much you intend to pay them. I highlight here this issue of lowballing, where you pitch an attractive offer and then increase the price later, or you, well, typically not usually in our case as auditors, of increasing the price, but you now have to do the work within that fixed price contract. And in effect, what you now have in terms of what's being compromised, of course, is this question of professional competence and due care, and the potential that unsatisfactory work would take place. You've probably only done this, of course, from a point of view of self-interest, but there are a number of things that go into jeopardy here. This question of audit quality and a potential threat to your public image, because you don't, if you say, listen, we'll do this work for £100 and you think you'll take two, you say, we'll do it for you £100 in a week. First of all, the funding isn't fair. Secondly, you can't probably do the work in a week, so you've just taken it on thinking you can do some economies of scale and you just need the money. And of course, again, like I say, that is very much a matter of self-interest. Contingency fees, yes. So it's impossible. We don't do it. We talked about this earlier when we looked at ethics. When we looked at ethics, and we highlighted that there are no situations under which we will allow for contingency fees, where depending on what the profits are, or depending on whether or not you get the extension of your borrowing before we get paid. Absolutely not. It does give one allowance, though, in insolvency engagements where a business is winding down and we have to sort of wait till the end of the disbursement, and then that's fine. So other options, like I said earlier on, it's possible to have a sort of fixed fee approach, or an hourly rate approach, where you list the number of people who are involved in the work. And of course, referral fees are very normal, where people are, as a result of a referral, there is funding or money that comes from that area. Acceptance, important point. So these always come back. I mean, the important points for I like to think of acceptance or re-acceptance. Is every time you're doing an audit, the scope would have changed of this audit potentially. Again, for all the fact that here you have a client who's expanding, pretty much where the scope is changing, and they might want you to do some more work. So generally, these are the general ideas here for when it comes to matters to think about when accepting an engagement. And you could almost think about all of these yourself, just thinking about it. So everything ranging from the professional clearance, so this is speaking to the prior auditors, preconditions for an audit, if you like, the reputation of the client, should you take it, how independent is this client, the integrity of management, or independent are yourselves, forgive me, are you doing some work already for them, can you be objective before taking this engagement, this audit engagement, issues of money laundering, and do you have the resources? So I guess what we'll do is in the last video, we'll tackle this business of acceptance.